If you're a buyer or a seller looking to make a real estate move in the $1 to $1.5 million price range, there are some big mortgage changes just around the corner that are going to directly affect your position going forward. In this video, we're going to go over some of those changes, looking specifically at a handful of price points and comparing the minimum down payments required for those price points, both before and after the changes come into effect. And stick around because later in the video, we're going to walk through a real world scenario of what the effects of these changes might look like, both from a seller and a buyer's perspective. Before we get into it, my name is Jason Bondy-Sawyer with the Bondy-Sawyer real estate team in the city of Toronto. I've been helping buyers and sellers make smart real estate moves since 2006. And if you'd like to book a call with me to discuss your real estate plans, you can do so using that first link down in the description. If you find any value in this video, please hit the like button so that other people like yourselves might see it as well. And if you haven't already, go ahead and subscribe to the channel so that you see more of our videos in the future. Okay, so back in September, when these new mortgage rules were first announced, I made a video taking a detailed look at all of the changes. I'll include a link to that video down in the description, and I highly recommend you take a look because frankly, it goes into more detail and covers more ground than what we're gonna do in this video here. So the federal government of Canada announced that there are new mortgage rules coming into effect on December 15th, 2024. And one of those changes, I'd say the most significant change, is they're increasing the cap on insured mortgages from $1 million up to $1.5 million. Quick recap, when you're purchasing a property in Canada, if you're buying with less than 20% down, in other words, you're borrowing more than 80% of the purchase price, you need to have that mortgage insured. And that insurance is in place to protect the lender if you default on the mortgage. So the current $1 million price cap on insured mortgages means that any purchase of $1 million or more requires a minimum of 20% down payment. When the new rules come into effect on December 15th, that cap is increased and the 20% minimum doesn't kick in until $1.5 million. So what that does is it now opens up properties in that $1 million to $1.5 million price range to buyers who have less than a 20% down payment. Okay, so here's that comparison that I mentioned earlier in the video. So on the left, we have the minimum down payments as they are today. And then on the right, we have the new down payments that are coming into effect on December 15th. So starting at the top there, prior to December 15th, any buyer that does not have at least $200,000 saved up for their down payment is not able to purchase a home at $1 million or more. It's simply not an option. Now, you can go as high as $999,999 because at that price point, you only need just under $75,000. But as soon as you spend just $1 more and go up to $1 million purchase price, you need at least $200,000 for your down payment. But starting December 15th, you can go up to $1 million and all you need is $75,000 down. You can go up to 1.1 with $85,000 down, to 1.2 with $95,000 down, and so on. The 20% minimum doesn't kick in now until you hit $1.5 million. So how are these changes gonna affect the market, both from a seller's perspective and a buyer's perspective? Prior to December 15th, let's say you're a seller and you're going to list your home for sale and comparable sales have been selling in the $1 to $1.1 million price range. You decide to underprice your property at $899,000 and have a scheduled offer date. Let's say you get 5 offers. Let's say 3 of those offers are from buyers who don't have at least $200,000 saved up. So the max that they can go to on their price is just under $1 million. And then the other 2 offers are from buyers who do have $200,000 plus saved up. So they are able to cross that $1 million threshold and outbid the other buyers. Now imagine the same scenario, but it's after December 15th. So now no buyers are capped at just under $1 million. Where there were only 2 out of the 5 buyers truly in the market for that property, there are now 5 out of 5 buyers. So for a seller with a property in that price range, more buyers shopping for your property potentially means a higher sale price. For a buyer looking to buy within that price range, well, it's a double-edged sword, right? Prior to December 15th, those 3 buyers in our example who were capped at $1 million, they never had a chance at that house. After December 15th, the door is open for more buyers to go shopping for those homes. But like I said earlier in the video, in a city like Toronto, where properties are quite expensive to begin with, there's already a lot of competition in that $1 million to $1.5 million price range. So these changes are only going to add fuel to that fire. So yes, the door is now open. The next level is unlocked, but you're not the only buyer who now has access to that next level. Over here next to me are a couple of other videos you might want to take a look at. Over here is a link to subscribe to the channel. That's it for now, and I will see you next time.